Hi, good afternoon, everyone. So thank you for joining our payment security webinar. I'm Andy Howarth, Product Manager at AccessPay, and with me is Helen Petty, our Data Analyst.
Good afternoon.
So we're going to walk through various topics around payment security today on fraud and error. So just to give you a quick overview, we'll look at what is payment fraud, common mistakes leading to errors and fraud, who is most at risk and why, security best practices, so what can you do to help mitigate the risk of fraud and error in your organizations, the future prevention of fraud, so what are people doing to help you prevent these risks for your organization, and then secure business payments processes, so automating to reduce this risk. And then we'll have some time at the end for any questions as well.
So what is fraud? The Oxford English Dictionary defines fraud as wrongful or criminal deception intended to result in financial or personal gain. So as an overview, we can split fraud broadly into two categories, internal and external. So internal fraud is committed by employees themselves. This includes things such as personal purchases, so for example, approving their own expenses report or supplier invoices. Payroll fraud, this can be creating ghost employees or falsifying timesheets. Skimming, where funds are intercepted before they can be recorded on accounting software. Things such as tax avoidance, asset theft, and unauthorized use, for example, like driving a company car for personal use, which would depreciate its value. Financial statement falsification, where you accelerate the recognition of revenues and delay the recognition of expenses. There's also external fraud. This includes things such as cybercrime. I think most people will remember WannaCry, a piece of ransomware that was released in May last year. There's also deception and impersonation. Many of you will have heard of Frank Abagnale Jr., who was from the film Catch Me If You Can. There are also many examples of managerial impersonation. This is where a fraudster impersonates a senior employee, often the CEO, and will pressure a more junior member of staff to pay an urgent invoice that has been overlooked. Phishing is another common area. This is where a fraudster attempts to obtain sensitive information, often by disguising themselves as a trustworthy entity, often via phone calls or covertly redirecting using a seemingly trustworthy link. There's also authorized push payment fraud, which we're going to talk about a little more later.
Okay, so more specifically, what is payment fraud? So payment fraud is any fraud that involves falsely creating or diverting payments. So we're looking at things like the creation of bogus customer records and bank accounts so that false payments can be generated, the interception and altering of payee details or amounts on checks and purchase orders and attempting to cash them in and process them fraudulently, creating false payment and financial information to support fraudulent claims for benefits, processing false claims by accomplices for benefits, grants, or repayments, so multi-layered fraud where there's multiple people involved in it, and self-authorizing payments. That's really just, paying funds to yourself where you're not due them. So we've highlighted some key topics there that we'll go through in this presentation. So common mistakes, what are the things that organizations typically do that kind of expose them to error and fraud? And this is a statement from Joseph T. Wells in the Corporate Fraud Handbook. So you will discover that while fraud may outwardly seem complex, it rarely is. You don't need a degree, just an understanding of fundamental business procedures and terminology. So this really highlights the fact that you don't need to be a financial director, a technology genius to commit fraud in an organization. Just having a good understanding of what processes are in place and how you can get around them is enough for somebody to commit fraud. So manual processing, a lot of organizations will have manual processes. They're very difficult to get rid of. As much as we'd like to automate 100%, they're always going to be there. They're obviously inherently error prone, so a lot of studies have been done around the accuracy of data entry, and it's widely accepted that professional typists have an error margin of about 1 to 2% with their keystrokes. And I know I press backspace a hell of a lot more than that. So think about this in relation to your payment files. So if you think that you're processing payroll or large invoices with that kind of error margin, you're going to end up with some failed payments or worse, payments to an incorrect beneficiary that you might not be able to recoup. It's very open to manipulation of the data at source. So even if you have automated workflows later in your processes, that initial manual entry can very easily be manipulated. So if you're getting invoices in, people can alter that data and then push it through an automated workflow. And obviously, if you have a manual process, it's very likely that the review process as part of that is also going to be conducted manually. So how likely is another person going to spot that error that may have been entered into the data? So especially with large volumes being in play. So another area where there's a lot of common mistakes is reconciliation and audit trails. So every organization and business has a bank account to operate, but how often are those bank accounts being checked in terms of statements? Do you check those daily, weekly, or hopefully not annually? Is it a manual process? Does somebody compare your statement to your ledger, or do you have an internal reconciliation tool to help you make sure that everything on there is as it should be? The same goes for any timesheets or expense reports. If your employees are submitting these themselves and completing their timesheets and expenses, is there a central process to review the accuracy of what's being entered, or is that sent straight through to a payroll team who won't really question it? And then invoice systems and existing supplier records. So you might have the best supplier and invoice system in the world, but if the records that are in there aren't being periodically reviewed, how do you know that they're still up for payment and that you're not scheduling payments to people who aren't still providing a service to your business? So it's important to keep on top of that. So touching a little bit more on supplier vetting, do you have a process in place to check the validity of new invoices and suppliers? So if you have a procurement team who are responsible for finding new suppliers and setting them up in the system, is there then a kind of siloed team who might handle the payments to that supplier? Because if there is, it might be that they're not doing the same level of checking that they should be to make sure they've checked with the procurement team and that that's still a valid invoice to your supplier. So authorised push payment fraud that Helen touched on before. Now this is something that's quite big on UK Finance's radar for this year. So you can see they've published some stats for the first time around the total cases. And this is really where a seemingly legitimate request for payment to dupe individuals or businesses is sent through to an organisation. So that could be someone impersonating your bank or someone who you regularly pay and duping that customer into thinking, yeah, I should make that payment, or that employee into thinking, I should make that payment. And because they initiate it and they're an authorised person on the account, it's very difficult for the banks to detect that as fraudulent activity. So you can see from the stats there that the total value is $236 million for last year, and only 60 was returned to the victims of the crimes. And that, again, that kind of emphasises how difficult it is to push back on this, given that it's an authorised instruction through to the banks. So a quick example here that a real common mistake made by an organisation. And just to clarify, this is the City of London in Ontario, not the UK, so the UK press didn't miss this one. But they essentially duplicated a tax payment file for one of their districts, which resulted in 33,000 homeowners being debited twice. It was to the total of around $17 million, which is going to impact anyone's bank account. And essentially, they had to go back, recoup that money from the people and give it, from their bank and give it back to their customers. But they also had to reimburse any charges and anything else that might have happened in relation to incorrectly taking that. So a big reputational sting there as well.
Okay, so taking a look at the organisations most at risk, PwC conducted a survey which found that half of all UK businesses said they had been a victim of fraud or economic crime in the last 2 years. This highlights the fact that fraudsters don't discriminate and that all organisations, whether large or small, can be targets. However, risk these organisations do differ. Smaller organisations may have so-called super users, so giving a single person full control over the finance and allowing them to initiate and fully process payments. This gives that employee a huge level of control and opens up an organisation to risk of fraud. Larger businesses, however, often have finance teams but process large volumes of payments. This makes it far more difficult to keep an eye on individual transactions and to monitor these at each stage. Larger organisations often use automation. This helps to reduce the errors caused by very manual processes, but it can create a false sense of security and allows an organisation to leave their payments unchecked. In 2016, CFAS, a fraud prevention service in the UK, found UK businesses lost an estimated £193 billion to fraud and financial crime. In 2017, Beaming published a piece of research that found the average cost of cybercrime was £4,559 in the UK. There are many hidden costs, though, related to fraud. With cybercrime downtime of systems is regularly enforced. Accenture found the average time to resolve a ransomware attack is 23 days. There's also loss of data. This is a major issue with fraud and with cybercrime. I'm sure by now that everybody's at least heard of GDPR and the implications of data breaches and the impact of this. We won't go into depth about that, but it's another thing to consider. There's often additional training needed for employees, which takes time and resources. During cybercrime attacks and system downtime, there will also be a loss of productivity. And of course, there is reputational damage, as Andy pointed out earlier. People are becoming more and more brand aware, and if a brand becomes associated with fraud, it can have a huge financial impact. We've now got a couple of examples. So an employee of one company was able to direct roughly £25,000 into their own bank account by simply altering bank details on invoices. This is an example we spoke about earlier of a super user, an employee that's been given the responsibility to edit and submit the process and invoice payments. Another, almost comical example, although I'm not sure it would have been for the council, is where a local council did not properly perform a bank account verification check. This resulted in some of the tenants putting through the council's own bank details from the direct debit form. The tenants were then able to live rent-free, and the council were none the wiser, seeing the payment being made on time. This is an example of lack of transactional monitoring that we also mentioned earlier.
Okay, so some security best practices. So, what can we do from a process and systems perspective to help mitigate this risk of error and fraud? And another statement here from Professor Timothy Pearson. So it's very rare to find someone responsible for fraud. It takes certain experience and skills to discover fraud. Otherwise, it's like looking for a needle in a haystack. If you haven't seen a fraud, you're unlikely to recognize one. So that's really kind of driving home the fact that it's very difficult for individuals and humans to spot fraud if they haven't seen it, and they need more tools and support for them to help them do this. So process controls, these are really things that you can implement procedurally or through process in your organization and your business to help you mitigate these risks quite quickly and easily. So like Helen touched on before, there's this concept of a super user, where it's an individual who will have kind of racked up a lot of cross-functional access. That might be for uploading payroll, but also handling accounts payable. Can they manually enter and approve transactions? Do they need that level of access to your systems, and is it reviewed? Do you create profiles that you assign to users to make sure you don't create this super user who could cause a fraudulent payment or an error that doesn't go noticed? So that applies to online banking portals and vendor applications. So an approval workflow for data entry tasks, so those manual tasks that you can't really get away from, do you have a second stage of approval away from the user completing it? Does somebody sign that off? Is that a manager or someone in the finance team reviewing the payroll? Just to make sure that those keystroke errors and data entry is as accurate as it can be. And then something that's a little bit more around culture is a risk assessment framework and promoting a risk-aware culture. So there's something called the 3 lines of defense that we'll touch on the next slide that a lot of large organizations and financial institutions implement. And it's really the strength of promoting a whistleblowing culture in your organization. People are on the front lines and they need to be able to kind of tooled and equipped and educated to spot these kind of activities over your accounts. So the 3 lines of defense is a concept where we really highlight that the people in the trenches performing these activities each day, the business users, they're your first line of defense, that they are the first opportunity to spot error and fraud, and you need to equip them and educate them to do that. A risk and compliance framework really is secondary to that, so it supports the education of those business users and sets that framework as to how risk is a culture in your organization. And then internal audit is really after the fact. It's a bit too late at that point. The fraud's committed, the error's already been made, and what can we do to correct that? So even if you're a smaller organization, a business, this is really valuable to see that business user needs to be tooled and equipped to defend against fraud and error. So some stats here from the Association of Certified Fraud Examiners. So again, touching on the fact that individuals and our employees are that first line of defense, tips or whistleblowing accounted for 40% of detections of fraudulent activity in this study, which is a really high number when you consider how much fraud goes on. And just to draw your attention to IT controls, wallowing at the bottom there at 0.8%, further highlighting the fact that even through automation and whatever security protocols are in place, the technology isn't good enough at the moment to detect these kind of errors. So system controls, so away from process, this is really what can you implement in your systems, whether that's banking portals, proprietary applications, or vendor applications, to help you mitigate the risk of error and fraud. So a segregation of duties, further emphasizing the fact to stay away from the concept of super users, creating these functional role-based access profiles, having one person to upload and manual entry of data, somebody else to approve it. And always having 4 eyes, 2 sets of eyes on any transaction. So a dual approval process. so that any portals require two users to execute payments, and that can really be, is it two different users, or do you allow a single user to enter and approve their own transaction? You should really be splitting that into a 4i process. Two-factor authentication, so the generation of one-time passwords to a secure device such as a company phone or email account, and secure keys like USB tokens that might be used. And this is really adding authentication in terms of possession as well as knowledge. So it's not just enough to know a login and a password to get into the system, they also need possession of something that will allow them to access it. And then strong password policies. Seems very obvious, but everyone gets frustrated with the fact they have to use capital letters and a random character in the password. It's not just for IT security to annoy us, it's to make sure that our passwords are as difficult to guess as possible from a human, and as difficult to decrypt by any malware or potential harmful software that might have breached our firewalls. And then password expiry policies as well, making sure that if a password breach does occur, that if it's not been changed, that we refresh those and mitigate that risk of people knowing our passwords. So a quick example of where some of these controls have failed really is Powa Technologies in London. They essentially had a single process for their payments through signing checks, signing whatever else it might be, online banking with a single user. So for a lot of their staff, and this wasn't picked up or detected, they became disgruntled due to various changes in the company, and essentially brought the company to the ground. So a once, 2.7 billion company failed to control their access to systems, and ultimately doesn't exist anymore.
So we're now going to talk about the future of fraud prevention. So Moran Surf, who is a professor at Northwestern University, said you can put 7 locks on your door, fingerprint technology, and a retinal display, and you'll forget to close the window. Fraud is constantly evolving, which means the methods that we use to detect and prevent fraud must also be continually changing, while still maintaining the basics. So we can't talk about fraud prevention without really mentioning data analytics. This is a massively expanding field and has a huge buzz around it at the moment. One area that's being expanded upon and researched into is user behavior modeling. This can be from user duration of sessions and click paths and location device monitoring. I think if you were told that a user generally spends 15 minutes on an application to process a payment, and then the same user seemingly takes a minute from logging in to approving a payment, it would be clear that something untoward was occurring. Location device monitoring has already begun. If you use Google Mail, for example, you'll often be alerted when logging in from a new device. Another area of payment or transactional monitoring is looking at the velocity, value, and destination of payments. Seeing if a transactional value falls outside of expected ranges. There is also multiple identical payments, and if payment patterns fluctuate from normal behavior. Reconciliation, as Andy mentioned earlier, is becoming an ever more exploited area, and thus the technology is evolving with more emphasis on reconciliation solutions. Machine learning, which arguably is the biggest buzzword currently, is pivotal for much of the new and ongoing research into fraud detection. Action Fraud have been slowly collating huge databases of identified consumer fraud from hundreds of contributors. This will allow machine learning algorithms to access large training datasets and ever increase the ability to stop fraud before it's committed. The new payment system operator, who is now responsible for the governance of the UK payment schemes, the MPSO, have committed to rolling out the confirmation of payee in 2018. This is to help combat authorised push payments that Andy and I spoke about earlier. In 2017, a total of £236 million was lost due to unauthorised push payments, and this with only 60 million being reclaimed. So as we know, this needs to change from being retrospective to proactive. As we know, fraud has a huge financial impact. In the first half of last year, a total of £261.4 million attempted pounds worth of fraud was stopped due to banking systems. Whilst this figure is impressive and ever increasing, there are still millions lost each year due to fraud. Of every £10 of fraud that is committed, £6.26 is being prevented. Shifting our focus to stopping the fraud in the first place rather than attempting to retrieve the money after is clearly the way forward. In order to be proactive, automated systems and alerting is springing up. This may be through fraud and error detection software and process control being put in place and identified issues. One area this is gaining traction is in transactional monitoring. Automation can help reduce human error, especially if the volume of transactions increase, but this can lull us into a false sense of security, as we mentioned earlier, around our transactions, leading to us not checking individual transactions and leaving them unattended. This opens a loophole for fraudsters, allowing them to funnel transactions through underneath the radar, safe in the knowledge that massive transactional volumes will mask their activity. Would you spot the one fraudulent transaction in 50,000 that shouldn't be there? So, for an example, a bank allowed an employee sole access and control over 1 million customer bank accounts. Due to this, they were able to siphon off a penny at a time from the consumer account. Before they were caught, they'd stolen just over £10,000. This again shows that we need to have more monitoring on our transactions, and automated systems are the way forward for this.
Okay, so we've talked a lot about what businesses and organizations can do internally to help mitigate the risk of error and fraud. So we'd just like to take a little bit of time to talk through our solution here at AccessPay. So we have an application called SecureFlow that sits within the AccessPay payment suite. And what this really does is it checks for transactions that fall into the erroneous or fraudulent categories that we've highlighted in this webinar. So things like duplicate transactions. So if you have a payroll file, for example, you wouldn't expect to pay the same person twice in a single file. You'd want to be alerted that there might have been an administrative error there. Certain currencies in the files, if you're only operating in the UK, sending backs or faster payments, you wouldn't expect a euro, US dollar, or Japanese yen payment to be in that file. The same if you know that your kind of suppliers are all in Europe, you wouldn't expect to see any currencies other than euros in there. And destination countries, so sometimes it's not enough just to check the currency, because we know currency accounts can be held in different countries, but you might know that all of your suppliers operate out of a single country. So we can alert you to any beneficiary countries that don't fit your profile for that payment file. Volume of transactions, so if you have a standard number of transactions you would pay, again, using that payroll file example, if you have 1,000 employees and you submit a payroll transaction file in excess of that, we can alert that and let you know. And with maximum monetary value, you can explain how you might only have a certain value set for any single file. If you know that your supplier payments total £10,000, you wouldn't expect more than that, you can set a limit and we will alert it as well. And also unrecognized beneficiaries. So this push payment, the authorized push payments, we can help you identify any new beneficiaries from your payment files that may be fraudulent or even just erroneous if someone's typed an incorrect account number. So we'd like to give you a quick demonstration of how our system operates. So if you just bear with us 1 second.
Okay. So for those of you who are watching this that are our current customers, you'll be very familiar with this screen. But for those of you who are new, this is just us logging into our portal. And we're just waiting for it. This might be an internet error. Okay, so as you can see, this is the main screen, and as I said, people will be fairly familiar with this, but if not, this is our payments platform. So what we're going to demonstrate now is a manual process. Some people will have an automated process, and they'll use SFTP, but for the purposes of this demonstration, we're just going to use a manual one. So if I log into the system, and I'll put through an international payment, and upload my demo file. Again, this can all be made automated. So one thing to point out, I'm breaking our best practice already, so I've made myself a so-called super user. So I'm logged in as an admin account, and I've made this just for the purpose of the demonstration, so I'm able to upload, review, and submit payments. Obviously, we would suggest that you wouldn't do this. So as you can see, my payment's gone through, and I'm able to review it at a high level here. So if we click into this payment, we can get our high level of information at this point, so a breakdown of how much in what currency. And we can scroll down here to see our analysis pane. So there is submission level analysis. So as Andy was saying earlier, if there's a total value or a total volume that you regularly expect to see, we can give you an alert if that changes. We can also see that there are 21 irregularities that have been picked up by our system across 15 transactions. So some of our transactions have multiple issues going on with them. And a breakdown of what irregularities have been flagged. So again, as Andy pointed out earlier, we can have things like we're using currencies that we don't normally use, and there are some duplications in there. So if we scroll down and have a look at our transactions, we can see that there are quite a few issues going on. Our red flags will give us a nice indication that we're not too happy with this with our medium risk and low risk. So if we just click onto some of these, it gives us a breakdown of what's gone wrong. So we can see here we've got quite a large value payment, and that's gone above the threshold that we normally process through. And we have some slightly smaller values here that are still going above that threshold. We can also filter on these, so we can just view our high-risk transactions. So it may be that we say, we're really not happy with this high-volume payment, and we can suppress it there. We can also filter on our medium risk, or just view all the transactions. And they go over multiple pages, and you can see that there are still some in there. At this stage, we can choose to suppress, say, this single transaction and say that I'm happy with everything else in the file, or we could cancel the entire submission if we wanted. So if I say that I'm happy to just suppress that one, we can then proceed through. So we can see our status has now changed to ready to approve. So again, normally this would then go on to another user, but as I said, I'm a super user in this case, so I'm going to go into ready to approve. We get the same that we did earlier, and we can still see what irregularities have been highlighted. So I'll just look at our high risks, and again, we can just have a look into those and see, oh, this is to a country that I've not approved, or it's above the threshold that I don't know. We can look at just our suppressed payments, or again, all of them. And at this stage, we again have the option to approve the submission with our suppression in there, or we can cancel the whole thing. So I'll approve through for the purpose of this. So again, this is just a nice quick demonstration, a kind of a taste of what our system really can do. If you have any questions around this or want a more in-depth or full demonstration, please don't hesitate to get in contact with us.
Okay, thanks a lot, Helen. So that brings us to the end of our demonstration of our webinar on payment security. So thank you all for your time, and we'd like to open it up for any questions now. So we've already got a few that have come in. So we've got one here from Jack. So what would you say to your CEO if he or she requests an impromptu payment? How would you push back? I think that, kind of CEO impersonation is quite a high common occurrence scenario in businesses, People are quite scared to push back on directors or anyone senior in the organization. And, I think it's important to stress that I think the CEO will obviously appreciate people questioning these kind of things, and having that good risk-aware culture, as we talked about, and having a framework for, a whistleblowing framework in there as well will help prevent that. But also, if you look at some of the ways that you can flag information there, if you have somebody in accounts payable who can only make, accounts payable type payments or supplier payments, you can use software and technology to prohibit payments to any other bank account. So, one thing we're looking at here at AccessPay is to have a kind of embargo list where for a particular payment file or payment type the customer might use, you can prohibit payments to a specific entity. So that would really come in play here. So another question, scroll through.
So we've got a question here from David about how AccessPay are using data analytics to detect fraud and specifically looking at user behavior. So we are actually doing a little bit of research at the moment around user behavior, things such as how long users are active on the platform and the velocity of those payments. We're also looking at things like timings and logins. There's also lots of different pieces of software out there that we're looking into that analyze things such as click behavior and patterns.
Okay, so I've got a question here from Sarah. So can you restrict payments to certain countries? So yeah, we can do that. The Secure Flow module, as Helen demonstrated, will allow you to select which beneficiary countries you're happy to send payments to. Now, again, that level of control can be at a currency level or a country level. So a good example is euros. We know that right now you can clear euros in the UK. So if you have a supplier in the UK and you want to pay them in euros, that's fine. So you might not want to limit euros as a currency, but you might wish to limit some European countries so that you don't get around that by paying euros to a different euro country than your supplier's in. So we can certainly restrict that at a country level as well. So a question here from Susan. So are there any white papers with facts and research I can share with my colleague? Yeah, we've got plenty of stuff that we can share around from, kind of new releases from UK Finance and that annual fraud update. So, we'll send our secure ebook as well. So if anyone's got any requests for material and documentation, just post that in the chat here and we'll get through to everybody. Okay?
Okay, thank you for your time.
Thanks everyone for the time. Cheers.